Airbnb announced their earnings yesterday, and the market likes what they saw. The stock is up 14% in pre market trading. The company announced that they grew more than expected, which was very good. They were more profitable and generated more free cash. Those things are all great. The travel industry has been doing well. And in 2024, the travel industry continued to see a lot of demand as consumers want to travel and have experiences. I wanted to take a look at the financials that were released. I updated my valuation of Airbnb, and I'll share with you what I plan to do with the stock. Am I going to hold it, sell it, buy more? I'm currently an Airbnb stockholder. So overall, the fundamentals of the company are good. The market cap of the company is 88 billion, and this is a new company. They have a unique business model where they rent private homes to people that are vacationing or maybe even traveling for extended stays for business and so forth, and they rent these private homes around the world. It's pretty unique. And I've been both a customer traveling on Airbnb or staying at Airbnbs, mostly in the US, but I've also stayed in them in Europe, Latin America, and Canada. Um, the revenue of the company is $11 billion. Net income, nice and profitable. And their forward PE is 32.69. It's a little high. Analysts have a hold on Airbnb and they feel that the stock is fairly priced. The stock year to date is okay, 7%. I think with today's gain, that'll make it quite good for 2025. But when we zoom out to the full year, you can see that this stock has underperformed. The stock hasn't really done all that great in a year where a lot of stocks did great. So what's going on, Airbnb? What's the problem? Well, I think that one of the observations I have is Airbnb is somewhat of a one trick pony. They have a very narrow business. They rent private homes, private units, private rooms. And I think that business is terrific. It grows organically. They do quite well with that. But they don't have a diversified business, meaning their competitors like Booking, they also rent hotel rooms. I think they do cruises. They'll get you a rental car. They kind of cater to the traveler in more ways than just the housing or the where you're going to stay. Um, and I think that's an advantage to the booking site or the booking experience. And of course, there are other travel sites like Expedia that do similar to what Booking also provides. And I think that's becoming a competitive disadvantage to Airbnb. They have the advantage of the user experience for home sharing or private rentals of private homes. They certainly have that advantage, but I think they need to diversify. Maybe they could acquire Lyft or they could acquire somebody else. They have over $10 billion of cash on the balance sheet. They could acquire Lyft. They could acquire a couple of other companies, and I think that would be a good idea. Great companies like, let's say, Google. Google had search and they were really good at it, but they just didn't stay as a single product or business company. They acquired YouTube. They started a cloud business. They diversified. They started developing Google Sheets, Gmail. They really expanded because if you don't keep getting bigger, more important, and have greater mind share of your customer and your market, your competitors are going to do it. So I would hope that Airbnb really expands their portfolio so they could expand the amount of business they can do with their clientele. So that's my observation on Airbnb strategically. Now, when we look at their financials that were released, it was all good news. They had very good growth on the top line, 12% for the year, very good. Bookings were strong. The profitability was stronger than expected, and the free cash flow was awesome. So yeah, it's just very good financials. And the reason why I like the business that Airbnb has is that they rent out units that people put on their site, very much like YouTube. YouTube doesn't create content; they just have content developers create content, put it on YouTube. Then YouTube benefits from that whole community of people sharing YouTube's videos. Well, with Airbnb, it's similar. They benefit from the community of people that own homes and want to rent them on Airbnb. They put them on there, but Airbnb doesn't own it. Airbnb doesn't have to clean the unit. They don't have to maintain it. They don't have to hire the people to do it. They just benefit from the sharing economy. I love that business. So those are the good aspects of Airbnb. I've always liked that about them, and that's why I bought the stock, and I've been a long-term holder. 26 analysts cover Airbnb on stock analysis, and they're pretty split on whether the stock's going to go up or down. The most optimistic analyst thinks the stock could go up to $195 per share, but there are some bears out there that think the stock could really drop to 90. I understand the sentiment. As I expressed earlier in the video, I do have my concerns that the Airbnb business is not diversified enough, like Booking. And Booking has outperformed the Airbnb stock, by the way, if you look at the appreciation of the stock over the last 12 months. Now, on average, when you take all 26 opinions and their price targets, it's a stock that's fairly priced, just priced a little bit at a premium. And of course, if it rises a lot today, it'll therefore be priced at a greater premium. The company has grown really nicely. It's now a pretty good sized company at $11 billion in revenue, and they're going to keep growing. Very good organic growth. That looks great. And their earnings per share is going to grow. And it's actually earnings per share is going to grow faster than revenue. That's a great sign. When you can grow and compound your earnings like this, that's a very, very good sign of a strong, valuable business. So I'll take this into account as I look at the valuation of Airbnb. I believe the stock is discounted by 38%. And that's when I take the present value of all their cash flows and determine what I think the value is of the stock based on their cash flows and the cash flow forecast that I put together for them. And that really drives a great valuation on Airbnb. Earnings per share also drive a good price target for the stock. But in combination, my price target on Airbnb is $194 per share, which represents a 38% discount. So am I going to buy more shares, hold, or sell? I'm going to hold my shares. I own a lot of shares. And I feel like the company in 2025 has to do a lot with their strategy. I'd like to see them, again, get broader and have more products and solutions to help them grow, because I think their current business has grown organically. And I would say they do that very, very well. But if they stay in that rut, like they saw their stock price really not do anything, actually underperform the market substantially in 2024. It's going to happen again if they don't have some excitement in the business. So for me, it's going to be a hold, but it is discounted. And that's my review of Airbnb. Hope you found it interesting. I'd love to see your comments on Airbnb if you're a stockholder, if you own one of their competing stocks. I must admit, the Booking stock has done far better than Airbnb. And way back when I bought Airbnb, that was the decision between Airbnb and Booking. And I don't get them all right. But on this occasion, I picked the horse that did not win the race. I picked Airbnb, and hindsight's 2020. I guess Booking was the better choice at that time. All right, everybody. Well, thanks for watching the video, and good luck investing.